Alright, so if anyone has any questions at any point, please just interrupt me. Ask them right away. I'd rather do that than you wait and wait. If you want, use DC Strat, any pictures, questions like that. So, first thing I'm going to start with is just the scenarios of the Strat itself. So from one rectangle to next, only 3 things can happen. So I will open up Paint. So in every candle, you have the open and the close, and the high and the low. Obviously, everyone knows that. So the first scenario is, now the color doesn't matter for these scenarios. So for example, this bar right here, it did not take out neither the high or the low, and that does include wicks. So if you had something like this, pardon my crap drawing, but this would still be considered a scenario 1, which means that this bar finished inside the range of this previous. As you can see, here's the high, here's the low. This bar finished inside of it. The next scenario is a scenario 2, which you take out one side of it, meaning you take out either the high, so like this bar takes out the high of this bar, or same thing, vice versa, you take out the low. And this would be considered a 2 up right here, the first one, as it takes out the upper or the high of the previous bar. This one takes out the low or a down for the previous bar. Again, the color does not matter. It does not matter if this bar is green or red or what this one is. All that matters is it taking out the high or the low with wicks included. And then the last scenario is the third, which you take out both sides. So you take out the high and the low, which would be this bar right here. You takes out the high of this bar and takes out the low. That is a scenario 3. These 3/4, if you really want to count these as individual, are the only 3 things that can happen in price action. So if I show you in Thinkorswim right now, you can see on even like a daily chart right here in Grow Generation, all of these are labeled already. So you can see how this right here, I do have my bars colored. So obviously I have ones colored for inside bars just to make it easier to see, and for you guys as well. So you can see this bar right here did not take out the high at 40.88 and did not take out the low at 37.02. So this bar, this day on the 17th, the range of Grow Generation was inside the day of the previous bar. And as you can see, the next day on the 18th, it took out the high barely by like 20 cents, if that. And so this would be, again, considered a considered a 2 up because it took out the high of the previous bar. And I'm sure you can see down here, even though this bar is green, it did take out the low of the previous bar, so this is a 2 down. And then I'll find you a 3. And then right here we have a 3. Obviously, again, you take out the high and it takes out the low. So that is your broadening formation, and that is what all price action is based off of. So with the strat, there is no patterns like head and shoulders, ascending triangles, yada yada yada. Price can only move in a series of broadening formations, and that's because of how price action itself works. That has nothing to do with indicators or anything like that. It's literally how price works. So what I mean by that is, where's my paint? I will do a new paint for you guys. And the reason it happens is, so let's say price will basically essentially expand like this and make a new high and a new low every single time. And the reason for that is anyone that is short right here at this top right here will get stopped out over here, and then they will now convert into buyers and force the price higher. And then price will then come back through the previous range. Anyone that is long right here will get stopped out, and price will now expand because those buyers are now sellers, and now you have more sellers, and now price is going to drive down further. And again, same thing, going to go back up the other way. Anyone short right here, going to get stopped out. Bam, you have a new high. Anyone long down here, stopped out from here. Anyone here stopped out, new low, price expansion. And that's all price can do, because people are going to have their stops. They're going to get stopped out. They're going to convert to the other side of the trade, because for every buyer in the market, there has to be a seller. So let's say you have 5 sellers here, like a 5-to-1 split, like 5 sellers and like 1 buyer. Once they get stopped out, and you have all these sellers will convert to buyers, and you would have 6 buyers and then whatever many sellers, if that makes sense. Again, if anyone has any questions, please just unmute and interrupt me right away. I don't want anything to be confusing. So that is essentially the, let me drag this person in. That is essentially the most important and also the hardest concept to grasp of the strat is the broad information and how price moves. Let me see. So the last concept with the strat is essentially time frame continuity, which if I will pull up our Twitch scanners actually that Word has. So almost all of the scanners that Word has are based on the strat itself. So I need some better quality, I'm not gonna lie to you guys. Okay, a little bit better. So as you can see, on the left, we have our time frame continuity column, which means where are the buyers and where are they and what time frame, and same with sellers on obviously the short side scan. But this is the long side, so we're gonna keep everything the long side. So as you can see, anything on this list needs to have time frame continuity, means it needs to be green on the month, the week, and the day in order to show up on the list. Because that means in order to have time frame continuity, you need buyers or sellers to be there on all time frames. That is the only way that can occur. And those are the trades that you want to be taking, because it is clear that price is going to be going in this direction, because on all time frames, that is the only color that you have for the bar. So, for example, NVIDIA, I believe this was yesterday. If we go to NVIDIA right now, it would be green on the month, the week, and the day. And then Word also does have smaller time frames like the 60, the 30, and the 15. But for all intents and purposes, the only way to get on this list is to have the time frame continuity of the month, week, and day. So if we pull up back to our TA, we can look at NVIDIA. We can see on the month, it is green. Obviously, I use hollowed candles for anything that's green, and then red for anything that's red, or filled, I should say. So NVIDIA right now in May is green on the month, it is green on the week, and then it was green on the day. So that is a clear example of time frame continuity. Buyers have to be there if you want to be able to be green on all of these time frames. And that's the only direction you should be trading. You should not be trying to fight time frame continuity at all, because that's how you they always say the trend is your friend. This is the trend that they talk about. If buyers are here on all three of these time frames, or four if you want to include the hourly, that is the only direction you should be trading. Now you can also have negation. For example, the smaller time frame can negate the larger one. So you could have NVIDIA right now. This was a red week, but it could be green on the month. So obviously that you have small conflict, but that conflict should take precedence over the larger time frame, because that means those quote unquote monthly buyers aren't there. You now have your sellers that are there currently on the week. So if we go back to the scans, again, anything Moderna, Crowd, like Vixen called out on Friday or Thursday going into Friday, Walmart, anything on this list will show up with time frame continuity. These are things that you want to be longing, and only longing. That's the only side of the trade you should be taking. And so for the other scanners, we have an inside day yesterday, which, if you recall, the inside day, or the scenario one, is when price breaks either the high or the low of the day before that. So if we look at SQ right now on the daily down in here, you can see it had an inside day yesterday. Just because this is from Friday, so that means Thursday had an inside day, which, as you can see, it is colored yellow, which, just for the sake of visual, it, again, did not take out the high of this or the low, so it's inside. So these are great ways to have already an automatic watch list at every morning to see how you want to trade them. Because for ones, you can essentially just trade the break of either side. Whether it breaks the high, in this case, which it did on Friday, or breaks the low. Now, obviously you want, again, time frame continuity on your side. So if you're going to be trading a break of a 1, you want the probability of that trade to be as high as possible. So if you are SQ on Thursday, would have been green on the week because price was at 222, so way up here. Price was clearly green on the week, so that should have been the direction you're trading. Yes, it was red on the month. Clearly red on the month, big red bar. But on the week, you have a conflict compared to the larger time frame. So you can trade off the smaller time frame or this week and take it long. But the most high probability trades are going to be when all of them are lined up, whether it be green or red. So you should have been shorting SQ all beginning of the month while it was red on the month, It obviously had red days if you're going to be this red on the week, and that should be the direction you're trading. So you could have taken SQ short if it did somehow break the low, but obviously if you're green on the week, that should point the direction of the bigger picture you want to be trading in for that time frame, assuming you're day trading. Now, if you're swinging, you really want to look at weeks and months and days only. But if you're trying to just day trade, you can just use the daily time frame and the hourly and small things like that in order to get in and out. So the way you trade these is, I will clear this up. I need to figure out how to delete your drawings. There we go. Okay. So the way you're going to trade ones is I would consider the bread and butter and the most beginner-friendly strat bar to trade, because it's very easy to follow, as you're going to take the trade whether it breaks the high or the low. So SQ on, I believe, I don't know if I had it on my watch list. I believe I did. Don't hold me to that one. But I'll see it right now. I did, yeah. So SQ, I had on the watch list for Friday or Thursday going into Friday. I wanted to see price break the high or the low of this bar. Now this daily candle does have the shape of a hammer, which I hope everyone can understand that it's literally a hammer. Looks like a hammer. So you would be more inclined to take price in that direction because you have lower price rejection at some point on Thursday, and that means you are more than likely going to take price higher. It's not always, nothing's guaranteed, but you should be more inclined to take the hammer or the shooter, which is the inverted hammer, in that direction. So because of this hammer, I wanted to take SQ long because it was also green on the week. So my trigger would have been 223.39 on the daily time frame, and we would have obviously entered right at this. You couldn't set your stop loss very, very tight with the strat. Almost, really, you really don't want to risk more than $1 if you're wrong, and that's assuming you're using like really large candles. Because if you're trying to long SQ over 223.40, you don't want to be in the trade if SQ's trading at 222. Like, you're already, like, the trade's clearly not working. There's no reason for you to be in it any longer. A really nice analogy I heard a while back was, if you're driving to work and you realize you're going the wrong way, are you going to turn around halfway through, or are you going to turn around right away? And that should be the same thing with trading. If you realize the trade isn't working, there's no reason to stay into it and try to see if it maybe comes around later. You can just exit the trade immediately. You don't want to lose more money by hoping that it, quote unquote, comes back and does whatever. So I can show on a smaller time frame. Again, this trade was actually very, very fast. I won't lie to you guys. But if you were to take SQ over 223.39, in the top left you can see that was right over this bar on the 3-minute, because you had a 2 up from the day before, another 2 up, price barely poked above, so you could have gotten in and again set like $1 stop loss, or you could have set it to the low of this bar, which still would have been less than $1. And that would immediately tell you whether the trade or not is working. And even if you did miss that, you could have taken, again, this inside bar right here. Once you break this at like 9:30, whenever it happens, 9:38, 9:37, you could have taken it long and just set your stop to the low of either one of these two bars, and you would have been good. And you can exit whether you have levels on the daily, which I did have from up here, or you could have used something intraday, or for example like a or trailing stop loss, or like an ADR indicator like I have, or whatever you wanted to do. But the point is, at some point the trade did start to work and totally could have made money. So again, I'm gonna take a quick question break. If anyone has anything, unmute, say it, or just type it.
I'm good so far.
Okay. Anyone else? Everyone else good?
I just hate the first 15 minutes, goddamn.
Yeah, the first 15 can be very challenging. I'm starting to I'm gonna just start saying screw it and just take the trade, because that's all trading is ever gonna be. You just have to take it, and just, if it doesn't work, you have your stop loss and that's it. Because more often than not, it still should work unless you get some really chap stuff. I think for stuff before 15, if I see like a really solid hammer on like a 3 or a 5, I can take it. Or something. Pull up the 5 on this. Like, for example, on the 5, you could have took the 2-1-2 up. If you wanted to wait before 15 minutes, you could trade, say, only trade inside bars. That could be a rule. Or really solid. Like, this obviously clearly isn't a hammer, but that could be your indication to take trades if you want to do it before, like, really quick in the morning. But really what it comes down to, as long as you have fast execution, like if you're using something like Thinkorswim or anything like that with hotkeys, you can just market order in and out really, really fast. It's okay to do. Now, if you're using something like Robinhood where you have to type in your bid and ask and then swipe up, like you really risk price running away from you and losing a lot more money than you should have from the beginning. That is one thing to consider. So I'd definitely recommend anyone switch to a better platform besides fucking Vlad. Even Weeble. Weeble's still fine, but again, just the fact that you don't have hotkeys and you can't queue market orders in and out can definitely cost you when it comes to options and how fast price can climb and drop. So the other things you can do, obviously, you have the break of the ones that you're gonna be that can be your bread and butter for now when you're first starting off with the strat. You can also trade reversals. So there's actually, I need to find it. There is a Strat combo sheet that I will try to find. I believe I have it in my files. I can go through with you guys. Okay, perfect. So these are all the Strat combos that you can do. Obviously, I just showed you guys the basically the ones, which is this upper section right here. Basically, you're trading the break of a 1, whether it be a bullish reversal, continuation, whatever. The point is, whichever price the 1 breaks first is the direction you can trade in, and then you can set your stop accordingly. I will upload this PDF so that people can look at it. It's just essentially what we're going over right now. So it won't be anything too crazy, but it'll still be useful for anyone that wants a refresher on a few of the patterns. And again, because of the scenarios that price action has, these are the only combos that can really happen. It's either a 1, 2, or 3, so you're just taking the, I forgot the name of it, but you're essentially just flipping 1s and 2s out of order, and those are your only combos, because you can only have so many when you only have 3 scenarios that can happen. Or not a factorial. I forgot, but that's not the concern right now. So again, Rob, the guy that made the strat, he also talks about time frame continuity. Again, using the 60 week and the day for trading your longs or your shorts. You want all of those to, or quote unquote, the stars align, however you want to say. You want that to be there as well. That way you can increase the likelihood of your trade, because obviously nothing is guaranteed. Some news could pop out, Biden could say some shit, and the next thing you know, we just fucking, we've all seen it in SPY. We're pushing like 420.72, and then we dropped $1 immediately. That was a fun time. But obviously nothing will ever be guaranteed when you're trading. But you trading with time frame continuity on your side is only going to increase the likelihood of your trade working, and that's all you can do. That's all trading is a series of probabilities and one thing more than likely occurring over the other. And you just take every single trade you can, and you should be able to backtest to prove that it works or not. So another scenario you could do is a 2 down, 2 up reversal, which should have been in here. Yeah. So for example, on SQ, if you wanted to take it on a longer time frame, the nice thing about the Strat is it works on any time frame. You can use it on the daily, on like 3-minute candles, or you can use it on week. Like if you're a college student or whatever, you don't have that much time to look at charts, you could use the daily and weekly only, or even the monthly, and just take really long swings off that. So like SQ, for example, here's a 2 down on the bottom right. Price, it barely wicks low, but that's why I have it labeled, so you can see that this is by definition a 2 down. So you could have longed SQ using the weekly time frame over 209.73. So you could have used that as your swing and set your stop again a dollar or two below. If you're using a larger time frame that you might want to give a little bit more room just because of how much SQ moves. or any volatile stock like that in general. Obviously, you don't want to use Tesla in like a 50-cent stop loss because you're probably going to trigger it every single time. But anything slow moving like that, you can definitely risk a really small move in the underlying before knowing that it's time to get out. So you could use this on the weekly time frame. You get the 2-2 reversal, back up through. Obviously, we're trying to take out this bar at 230. So we're almost there. It's getting there. Price can sometimes, it's not always, your goal with every trade is to take out the previous bar. It's not always going to happen, but if you're swinging SQ, you really don't have a reason to exit either right now. So it could make a bar at like 223 and then up at 230. We don't know. No one's ever going to know. If they say they know, that they're lying. So the reason for that is this strat is going to be able to work on any time frame. So you could have used the daily time frame to get in at a small entry. So that 209 level, you can kind of see right here, is on this daily candle right here. It happened on Monday. So if you were to take a trade on that, you could have either entered breaking the high of this at 208. So you could have used a smaller time frame to get a better entry on the larger time frame, which is a really popular thing. Because you can take, for example, I had the daily trigger, again, if you guys remember. You could have used the 5-minute to enter right up here in the top left. Or again, you could have used the daily to get a sniper entry on the week. Or you could use the hour to get a better entry on the day, if you're using the daily candles, that kind of thing. So whatever time frame you're trading on, more often than not, you can go down one time frame smaller to get a better entry. And then your goal is to then trigger the actual initial move that you wanted. Is everyone good on that? I'm going to assume so, but again,
Yeah.
Anyone has any questions, please just interrupt me. No point in blabbing and you not knowing what's going on.
I think you said you're recording this also, right?
Yes, this entire thing is recorded.
Okay, cool. Because I'm trying to watch a 5-year-old and watch this at the same time, and I'm not gonna lie, I'm missing a lot.
No worries. Everything's totally
This
good.
meeting is being recorded.
Fabulous, thank you.
Yeah. So, again, I don't want to dive too much into advanced stuff unless people already know the strat. If anyone here is brand new, like new, like you don't even know what a 1, 2, or 3 is, besides me just saying it today, things might get a tad confusing, but anyone that has studied the strat a bit should be able to pick up on things fairly well. So I'm going to try to dive into some more advanced stuff, because right now I just covered the basic concepts. So I personally like to trade reversals. I don't like to do continuations because they can be kind of wonky. So for example, on SQ, you get this on the 17th, you get a red hammer. Now obviously it's red, color doesn't matter for it's quote unquote an actionable signal, a hammer or a shooter. So right now, like SQ on the day is a shooter. It looks like a hammer upside down, go figure. So you could be looking to short SQ under 221.65 if you want to. Now we do have a new month of stuff coming, so time frame continuity is actually going to reset. So this is actually probably the worst day to talk about this because of uncoupling. But going back to this 17th bar, obviously your goal on every trade you take is to take out the previous bar. So by definition, this trade did work, because if you were to take this long the next day, the 18th, over 205, you would have taken out this bar at 208.3. So by definition, the trade could have worked. Now, if you bag held whatever, that's your own fault. Honestly, there's nothing wrong with taking profits at your targets, because that means that's where price hit. There's nothing wrong with getting out early, because you already hit your target. You know that you made this amount of profit, and you're good to go. If you want to give it more room, you can. I don't know what happened on the 18th. I'm not going to go look. But by definition, because price reached the previous bar, the trade was successful. And that's the only definition they use. Now, obviously, if you were to take out the bar on the 13th, that's bonus. Nothing wrong with bonus. Everyone loves bonus money. But if you take out the first bar, by definition, the trade worked. And if you're still in it, that's on you. Now, what you could have done is, again, obviously your goal is to hit 208. If you did want to, if price looked like it was pushing up higher, it could have been. I don't know. You could have set 208.3 as your underlying exit. So that could have been your new exit point. So you could have let price push up and say, okay, it's no longer going up to 11.5. If you realize it's not going to make it, you can just exit at 208.3, if that makes sense. So you go up, realize price isn't going to reach the next candle, so you can set your new stop loss or trailing stop to 2083 in the underlying, assuming you're using options. And I'm not counting theta and all that stuff, because theta is controllable. So the reason I want to show you guys the brown information and why it's so important is because, for example, like BA, on the daily right here, this, what is called, is known as a pivot machine gun. So what that means is anyone that is long or short, like I mentioned in the painting, is going to have their stops at the high or low of the bar. So anyone that is short right here, we'll say on the 13th, 12th, whatever, they're going to have their stops at the top of these bars. So you can see that you have a high at 228, all these pivots right here that line up. And now for the pivot machine gun definition, they like to use 5 or more higher lows or lower highs. You can trade off of 4 if you really want to, but 5 is like the golden rule. Now again, these are all consecutive higher lows. It's not like price bops up and then this can't be used as a pivot anymore, if that makes sense, because people already short here would have been stopped out. So what happens on the 18th actually is price reaches up, hits 228.6. Anyone short here is stopped out. They are now converted into buyers, and now price is going to push up more. Anyone short here, stopped out, push up more. Again, stopped out, pushes up more, pushes up more, pushes up more. And this happens on every time frame. This is why the broad information exists. And that's why price will always seem to literally, quote unquote, bottom out and come back the other way. Because anyone that is short here is getting stopped down, converted into a buyer, and now they're no longer there. And now they're being converted into buyers and pushing up price higher. And this, again, happens on all time frames. This is BA on the daily. I still have my pride and joy W that I called that no one listened to, and I still hate everyone for that. Again, same exact setup, but this is on a weekly time frame. Again, you have a pivot. I'll clear these. Let me clear these. Again, pivot here, 307, pivot here, 320, pivot here. Didn't take out this pivot, but you took out 3 on the week. You really can't go wrong with that. That's a lot of money because you're in, again, on that 2-2 reversal, you get a really solid hammer on the week. On the weekly time frame, you get a solid hammer. So you're in at 307.12. Set your stop, 306, whatever. You're in at 307.12. You stop out these people. Anyone short last week is underwater, and they're now converting into buyers, which forces price higher, and now you take out this 324 pivot. And then you didn't reach the 330, but either way, you're in at 307. You're talking a $20 move in the underline. And for option contracts, anything you had probably went in the money. And would have, or if you went out of the money, it would have at least gone 300-400%. And again, this is on the weekly time frame that this happened. And what I just showed on BA was on the daily. This happens on every time frame all the time because it's people just getting stopped out of their trade. Because I could show you HD right now on the hourly, and I could show you the exact same thing. And this was Wednesday? Yeah, Wednesday. You have a hammer on the hourly, solid hammer, pivot, 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 pivot. Look where price stops, right at the top of this pivot. Anyone here? Stopped out, stopped out, stopped out, stopped out, stopped out, boom. And this is on the hourly. You can trade this pivot machine gun setup on every time frame. Because all it is anyone short in the hourly has their stop at, like, say, the top of the candle. Price reaches up, they get stopped out. They're now converting into buyers and pushing price higher. So I just showed you a pivot machine gun on 3 different time frames you could have traded. It's absolutely insane. And it happens everywhere all the time. And once you see that this is the only thing price action can do, you're going to realize that this is it. This is the only thing that can ever happen. Because nothing else can happen. Again, even right here, HD. 1, 2, 3 pivots. Boom, takes it out. Obviously, it finished right in the day. It's not the concern. But at some point during the day on the 26th, this was a fucking fatty green bar that took out all of these pivots from people that got short on the 21st and the 24th and the 20th. And took them all out and pushed price higher. And that's your expansion of price. So, I might be able to show you. Fastly happened. I think it was a while ago. I might not be able to find it. That's not the point. Point is, this pivot machine gun setup, all that happens everywhere all the time, and it's just price action because that's all it is. It's not using moving indicators like, oh, this is a good company. We don't give a shit if it's a good company. You're trading price action. It doesn't matter what Wall Street thinks PLTR is. Remember this motherfucker was like 40, dude? Way back, dude. Way back. Like, you had no idea. And that's just what Wall Street gave it. But you're trading price action, you're good. And again, you could have done trade down the daily, trade the one, got the double inside one, take it short right here, 34, boom, you're making money. Next day, pukes more, making money. Get the inside bar, you can take it long. Why not? This is all that price can do. And again, even you can see here on the daily, all these pivots to take out, it does it over a series of days. It's not going to always do it all at once, but you can see how it happens. Once price reaches up here, stops these people out, and then just keeps climbing up. Now this bar stops out everybody, and you can see it pushes up a little bit higher because anyone short here had to turn into a buyer and now push price up higher to exit their position. Now you get the shooter and it's done, but at some point again, this was a fatty green bar. This was a fat green bar of like $1.50 range, which on PLTR is nutty. So, everyone good on what I'm saying? You're essentially just stopping. Essentially, what's happening is people are getting stopped out and converting to the other side of buying or selling, whichever one they're doing. And I can actually show you what I'm looking to set up. This is going on the watch list. I promise you all. If you're watching this,
yeah,
you
seem very excited about this one.
This one is heat. This one is absolute. This is the best setup I've seen in a long time. Because you have like, now again, I'm not counting this pivot because this pivot is now higher because of a 3. So you cannot count this pivot. But essentially, you have like 7 pivots to take out and an inside week on the bottom. Because I have a broadening formation drawn on the monthly from here to here. So anytime GPN has a fat like red month, you can see price climbs way up. Even though this is an inside bar, it still climbs way up. Like this was like a $20 move. So I'm hoping that history repeats itself. Any big red bar just repeats it with a series of buying. And go see what happens if you're watching this in the future. See what happens if it breaks 194.95, because this could stop out everybody, and then you have an inside week right here. It could trigger an inside week up, and you're already in at 195. You're in way early. You're in like $5 early. And that's the power of the strat. Is all you're doing is just trading price action. And once you break this high, you're in. Set your stop to like 194. You're risking $1 of delta. And assuming you're not trading a super in the money contract with like 80, 90 delta, you're going to lose like maybe 50, 60 bucks if it doesn't work, worst case. But the reward is absolutely insane. So keep this one. Everyone in this chat, watch this. Just watch this. Even if you don't play it, just watch to see what happens. Because that's what I like to do. Is I like to mention things before they happen. Because you can always just play hindsight and say, oh, trade here, enter here, exit here, and no one's going to play the trade perfectly. Because when you trade, you're trading in the moment with information that's being presented to you right away. There's no way to, predict trading or use hindsight trading because you don't actually know what's going to happen. So, now in terms of like things that I look for, again, I like to trade reversals. So, I will like to look for essentially a 2 up or a 2 down that is not in force. So what I mean by not in force is, let's say price pokes up, makes a 2 up, and then we'll say this is a red bar. I'll color it red. And price closes below the high. Everyone follow me on that? Price goes up, makes a 2 up, and closes below the high. So this was a 2 up that is not in force. or vice versa, a 2 down not enforced. So say I have a green bar, price could come down below, make the 2 down, and then come back through. Those are the
So
things I like
basically,
to look for.
it tried and failed to go a certain way.
Correct, because that means you have price rejection in one direction. So you want to trade the direction that it's now going. So for example, if I look through my list, it's literally the close is less than or equal to the high of the high from 1 bar ago, in terms of like thinkorswim searching. And the high is obviously greater than the high. But the close is where price finished at. So if we go to anything on this list, because it wouldn't be on the list if it wasn't, I can load up Tesla. Everyone loves Tesla. You can see we have a 2 up on the day, but price finish way down here at 625. So this would be something that you can look that would show up on the list as something to look for to take short. Now again, you want to look at other time frames always. We had a red month with a bottom tail, kind of solid. We had a green week, so pretty solid. You could have been in way early at 595 if you wanted to swing Tesla like a psycho. Yeah. So, and again, anything on this list would again show up just like that. So again, Netflix would be a great example of a inverted hammer. You can see we had a 2 up, and now we are coming back through, hopefully, to short it tomorrow if we're red. And again, if we're green, don't short it, or your trigger will probably not even happen. But you definitely want, with the Strat, you really don't care what direction the market's going anymore. Like, you're not like, oh, my calls, and like, you don't care. The only thing you're concerned about is, do you have momentum or volatility? Because you want price to move. You don't want it to sit there and sit inside a 1 all day and do nothing. As long as price moves, you can make money. Because puts are calls inverse. They're just inverse calls. That's all they are. No reason to not be playing puts. Dude, we could have the 2008 crash and we would have been printing money. I tell you what. Because we would have just had puts and they just fly in the money. So, for example, again, Netflix, we have a solid shooter. It's an upside down hammer. Hopefully that is, everyone's able to grasp that. So you could use your entry on the daily time frame under 502.53 and just go from there. Take the trade. That's all you can do is take the trade. You don't know what's going to happen. I can't tell you what's going to happen. No one can ever tell you what's going to happen. Just take the trade if it works out, because you're trading probability setups. The likelihood of a shooter or a hammer working is a lot higher than trading just a normal inside bar. So that is a good reason to take the trade, because even if, let's say, 7 out of 10 trades work, it's okay if you lose 3 of them because you know the other 7 are going to work. So you need to take every single one that you have, if that makes sense. You need to trade in a series of probabilities. Now, obviously, if you get 2 of them wrong, not you, if 2 of them don't happen in your favor, that could affect how you take the third always. And that's why it's really important to have a clear mindset and think in probabilities. That as long as I'm taking this shooter, the likelihood of the shooter working is a lot higher. And so you need to take every single one. Again, even you could back test this if you really wanted to. Again, you have a shooter right here. It gaps down. Not going to count a gap. But shooter, not shooter. Let's find a shooter. Let's go Netflix hunting for a shooter. I want a red shooter though. Okay, here. Red shooter. Looking good. Take it short right here. Boom. Makes money. You can scroll back through a weekly or a daily or whatever time frame you want to look to just the back test and see how it works. You could back test every single one and see what happens. You know, you take the break of this one long, take out this. Like, the trade worked. You can't say the trade didn't work. It stopped literally right here at this pivot. Might be off by a couple pennies, but 5, 6, 9, 9. This peaked higher by like 14 cents. But either way, the trade worked because you took out this and you took out this. Or again, backtest the hammer, boom. Didn't work, but that's okay because you know other times hammers work. And that's what's really important, is you need to think in a series of probabilities when you're trading and not be so attached to one trade working. Because the reason you took the trade is you're expecting it to work. And that's part of the problem. You can't have that mindset. You just need to expect something to happen. Like if you go to a slot machine right now, and what do you expect? What do you expect when you go play a slot machine, right? Just something to happen. We can keep going through this list. Like we can pull up Roku. Just anything on this list is gonna look somewhat similar. Roku, semi-shooter, looks good to short. We'll have to see what happens. Or again, use a larger time frame. That is a solid hammer on the monthly, and 2-up green on the week. So this could just be any buyers taking their money off the table or taking profit, quote unquote. And you can be looking just to long it over 356, 7, or yeah, the weekly and the monthly is the same trigger. So you could just use that as your long-term trigger, or you can try to quickly day trade it short. But we don't know how we're going to open up Tuesday. No one does.
So how do you get your watch list? Is it just the scans on the Twitch? Or do you just have your own personal one that you've gotten over months?
Yeah, so I just go through these lists. Like I have the 2-up days not enforced. I also have the 2-down days not enforced, and then I have like inside days.
Oh, okay, got it.
And so I just go through the list and say whatever looks best to me. Now, what in terms of what looks best, I go off of, is it an actionable signal? An actionable signal being this like a hammer or a shooter, and then also are there pivots to take out? So like, again, GPN. Look, it does look bad on the daily in terms of this candle. This is basically just a fat 1. It's barely a 2 by like a couple pennies, but it's essentially a 1. So on the daily, it's not looking that good. But if we can take out this high, it has a lot of pivots above it, and that's why I'm eyeing it so much. Is because you can stop out all these people and push price higher really, really fast. But that's the only reason I'm going to take the trade. If it doesn't trigger, I'm not going to take it. There's no reason to hop in early. Or again, you could wait on the weekly if you're really busy and if you're a mom or whatever and you really need like very slow paced stuff that you can only check the chart once or twice a day if you're a student or something. You can just again use weeklies or daily time frames or even the like weeks and monthly time frames and just trade off that alone. And there's no reason it can't work. Like there's no reason it shouldn't work. Like for example, I have like an inside week scan, so a lot of stuff finished inside a week. Amazon. Bottom right, inside week, shooter. Oh, that's not good. So like, clearly you can see on the last 2 weeks you have higher price rejection. So you could be looking to short Amazon under 320.09. I think that is. Yeah. I think 320.09. 320.10. But yeah, that's also the same on the. It's not the same as the daily. But again, you could use the daily to get a better time frame entry on your weekly trigger. So you could take it short under 320.19. And you're looking to trigger the 2 down on the week by taking a trade from the daily time frame. And that's how you can use smaller time frames to get better entries on your trades. And so it's mainly just going through the list and saying what looks good, what doesn't. Baidu looks pretty good. You got a nice fat green. You have a hammer from the day before and a green bar the next. That means that hammer was in force at some point and was looking pretty crispy. It would have been up a couple bucks. Yeah. So you could look at to either take it long over 197.22, just right over this daily, because that would trigger a 2-up week. And it's clear that buyers were here, not during the week per se, but they were there towards the end of the week, because they had the lower price rejection here, and then on Friday they just bought it up. And again, your goal is to only take out this at 197.75, so not that much, to be honest. But who knows what you can stop out on this weekly from the beginning of May. And if you go to the beginning of May, you just have gap fill. Like here. So you could have all these pivots on the daily time frame as either targets, or you at least want to watch price to reverse it. Because if you know price reverses at 203.33, those sellers are going to hold it. And so you don't want to be in that trade any longer. Again, you can always re-enter a trade. If you break 203 later in the day, or like say on a couple days down the week, sure, enter back in. But you don't want to be in if you can see that you price reached up here and then sellers or whoever the other side is, if you're going short, is just more aggressive and just buying or selling and not letting price reach that other level. Or like coin. Oh, coin's done, dude. Coin is so done. I'm sorry. I'm sorry if you're long coin, dude. It's done. Maybe not. Yeah, it's probably done. We'll see though. But again, you have your trigger. Just take the trade. If it doesn't trigger, if you look at my list, half the stuff just doesn't even happen. Like literally, just have it doesn't happen, and the stuff that does, it's like 60% of the time it's gonna work. But again, that's all you need for trading. If you have $1 stop loss and everything, and you're giving up no more than $100 every trade, or however many contracts you have, which you should calculate your risk if you're not already, chances are the one trade that works or the two that work should pay for all of your losses, as long as you keep your losses small. If you let, again, your mind try to trick you and say, oh, it's going to come back, blah, 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 you could let one loser turn into a really big one, and then all of a sudden you need a really big winner to get it all back. And why even risk that when you can just cut it early and be done with it? And that way, save your money. And again, if you wanted to trade this, you could use the daily for a smaller time frame entry. Again, you could trade it under 236.54. Take it short, and you're trying to trigger this 2 down week. Assuming it happens. Again, it might not even happen. Coin could gap up, say fuck you, I'm going up to 250. You don't know. None of us know. But obviously, if your trigger is 236.54, you're not going to be taking it short at 250 because the trigger never happened. You're not going to be trading it. You should only take the trade that triggers. Not trying to... You want to have a very clear reason or candlestick to be entering the trade. Not just trying to get in early because you want to, quote-unquote, just get in early. It needs to be clearly defined. Or if you really don't want to risk it at all, just wait till your weekly trigger happens or your daily or whatever time frame you're trading on to happen first.
BlackBerry.
BlackBerry? Sure. Well, it's a meme stock, so it kind of did that. It's probably going to die. Unless Wall Street bets survive it, it's going to die again.
BlackBerry to the moon.
Maybe.
Go ahead.
What?
Go zoom out. Zoom out like to like the 2000s.
2000? Yeah, this is what Rob would call a used to be somebody. Oh, wait, you want the 2000s? This is 5 years. Oh my goodness. I'll give you a 20 year. Yeah. BlackBerry is a I used to be somebody stock. So, who knows? But you can see even that peak from Wall Street bets is nothing compared to what it once was. But again, either way, you look on the daily, that's a fat shooter, dude. That's a fatty shooter. Just shorter under 995 or 995, yeah. 994. It's probably going to work. Especially if there's no hype from Wall Street bets or just in general, or if market's just red. No reason to not short it. Stop out these people at 927. That's your first target. You get a bonus. I highly doubt it. Stop people at 860. Free cash.
I think this meme cycle got one more week, but for this meme cycle.
Probably. I don't even know. We'll have to see. But again, that's all we can do. We just have to see and react. That's all we can do. Oh, yeah. Sick example of marking your charts. Pod, take the 2 up. Look where it stops. Right, this daily pivot from like a month ago. Always drawing your charts. At least give yourself some daily pivots to work off of. Drawing on your charts is the best thing you can do for yourself. Because that way you know at least something could happen here. Rather than going in blind and saying, why isn't it peaking above 280? So I don't have any questions yet.
Are your triggers tight or are you waiting for it to hold?
You mean, do I let price? Okay.
Like the second it crosses, do you jump in
Yes.
if it crosses by a cent, or are you waiting for it to hold above that?
Yeah, you get in right away.
I just get in right away. I just market order in. You should already have your loss and risk predefined. So you already know what's going to happen if the trade doesn't work. But you don't know what's going to happen if it does work. And the last thing you want is to miss it and let the ask or whatever run away from you. Because I guarantee you, you stop these people out, it's gonna fly, right? Or again, remember HD that I showed in the very beginning with that hourly pivot machine gun? On Wednesday? Yeah, on Wednesday right here. Oh, I'm sorry. On Wednesday right here, this happened. If you look on Wednesday, no, this is Thursday, I'm sorry. On Thursday, this happened in 15 minutes. And really, if you look at it closer, it didn't even happen in 15 minutes. It happened in like 5. If I go to Thursday, you get a fat green in the first 5 minutes, and then you push above it quickly. Like you have no, if you're waiting, you have no time for this. Price would have already ran $1 away from you. You know what I'm saying? So I just take it as like the moment it happens. Just hit the ask and get in. As long as the spreads aren't complete trash, but then you shouldn't be trading if the spreads are that bad. But yeah,
So when you send your order in, you already have the stop set up, or do you set it up right after you send your order in?
I use TOS and I just set it up right after. Or I know what the stop is, so it's not that big of a deal. I just have the stop like already. Well, because I send the order and then put in the stop right after, and then I set the trailing stop and do whatever. But yeah, especially like Robinhood, if you ever use that, or Weeble, you watch the ask like run away from you, so you have to resubmit the order every time. If you ever used it, or like anyone that used it knows exactly what I'm talking about. You watch price climb really, really fast, and you have to refill the order with a new ask, and it still might run away from you. You don't get filled, and then you're in like, and you're paying like $60-$70 more just for the contract fill. That's why you need to get in like immediately, or again, dump Robinhood or whatever, and use something that you can queue a market order in immediately, and that way you'll get filled no matter what. Because if you let price run away, it's already too late. Because again, like on HD, it's gone in not even 5 minutes. Not even. Like it's already gone. So like, yeah, this is an hourly candlestick, but like what really happened was in like not even 15 minutes, if that. The whole move. So. Yeah, I just market order and everything. At least for hitting the ask to get in. You can limit order to get out, but to get in, you should be hitting the ask. There's no reason not to. Because if you could have gotten in at like $500 with a market order, why would you set a limit to like $490 and then price runs away and now it's $550? You're paying $50 more now to get in that same trade, when you could have been in at like 5 or even 510 if you hit like if you got a bad fill with a market order. But that's the problem with Robinhood and stuff, is you can't market order, you can only limit order. So the ask could literally run away from you as price is climbing, and you can get screwed. Or just not get screwed, but at least you'll lose a lot of initial profit just by paying more for the same contract. It's a great example. UPS. Inside week. Double inside week, actually. It's going somewhere. We don't know where. We'll see. But something to watch. And again, you got the trigger right here. On the week, it's 211. 211.17. You could use the daily. You have an inside on the daily. You could use that. You could be in at 213. You could be in at 213. Take it short or long. And that's way better than waiting until 211. That's a good example. That's another example. Smaller time frame to trigger stuff on the larger time frame. Same shit. That's all it is. It's all price action. You're gonna stop out these. Now again, I'm more looking to take this short. You have exhaustion risk. This thing is all at all-time highs, so it has way more downside room than it does up. It already had the higher price rejection. So I'm hoping for a gap fill, to be honest. I want to fill this void eventually. But you can see on the upside, there's only this pivot at 216, then 217 this. Which can happen, but you never know. But you definitely want your pivots to be at least semi-close to each other. You don't want $5 wide pivots because you're probably not going to reach them all. These are just markings to see, okay, if price does reach past this 211, etc., what's happening. I think I just lose power? My lights flickered. not
Nope.
good. That is not good.
Not for now. For now, you're good.
All right. Wow. Excellent. So, and again, these are just things that I'm scanning for every week, and this is how I'm forming the watch. This is how many pivots are there to take out, and is the candlestick itself an actionable signal? Essentially, the two things I'm looking for. Now, for gaps, I want to cover gaps a different day, just because they can be a lot more complicated to play, because the market does not like gaps and they want to fill gaps. And also, when you have places of low volume, price will slash through that very, very quickly. I'm learning about using like volume profile and stuff. So that is something to be very careful of. But for right now, as long as price doesn't gap below or above your entry, you can take it. So as long as price doesn't just dump below at like open at 212, you can take it short at 213. Or if it does dump below, you can be looking to hit this at 211, etc., etc. Or take this, boom, 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 all-time highs. I doubt it. It's UPS. But again, no one knows. No one knows what's gonna happen. It could. This could just be the week of UPS, for all we know, dude. This could be its time for 230. But
We gotta find out when to short Nvidia.
tomorrow, no. Dude, there's no entry on this thing though.
Don't touch Nvidia right now. Who knows?
There's a little bit of flow for that.
It could keep going up.
But yeah, that's what I'm saying. Like, we gotta just be cautious for right now. But it'll go down sometime.
Don't they have their earnings soon?
They already had
It
it.
already had it.
Oh, they had it. Okay.
But I think there's a lot of stock split hype. So
It is stock split hype. But there's no good entry to short this thing. I mean, look at this. Look at that move. Look at that move it made in an hour and a half.
yeah, I was at work Friday, but literally anyone could have played Nvidia on Friday, like any time, and made money, like all day,
Dude, yeah.
all day.
That was to throw a dart at the board and win. You
Like,
know?
you could have gotten any time and made some money.
Yeah, you could have made. Yeah, I agree. I mean, I need to see how it opens up tomorrow, dude. This really matters. If you really want, all right, let's see what we got in the hourly. I mean, you PMG. You know what I'm saying? Like, boom, bing, bop, bam. I'm just saying, dude. I'm just saying. Yeah, or I mean, I wouldn't use the hourly though. I would use like the 130 or the 210, maybe the 130. So like, what is this? 646. Because Nvidia could easily like drop $1. Because like I tried shorting it on after the gap up, that stock news it had like right here. No, I tried shorting it. Yeah, I tried shorting it on the 21st, which still did work, but at the open it was a battle. It was a coin flip and a half in the market open. It was so bad. You had no idea which way it was going. Yeah.
If it runs, I feel like we should play it.
If it runs, yeah. Oh yeah. Oh yeah. Take it over 650. Fuck it. 651, just long it, dude. What's all time high?
It's all time high right now.
Oh,
Right now.
oh no. I mean, you do have exhaustion risk, and yeah, that's the only concern is you do have exhaustion risk.
Play some kind of spread or some shit.
What spread are you gonna play on this thing, dude? Like what? What do you want You want a little vertical spread on this boy? What do we got? All right, dude. Honestly, dude, we could play a 650 put. Wait, no. Oh, what is that? Why is this so wide? Yeah, don't play this, dude.
I called a 640 put. I don't know if people already got it, but I'm like,
no,
wait till
you didn't.
tomorrow.
Oh no, you didn't. Why? I'm not gonna say why. I mean,
There were some flows on it. That's the only reason why.
I mean, what happens after stock splits usually?
Well,
Like it runs up, but
after
then
the
what?
split, after the split usually drops.
Yeah. Isn't a 4-to-1, so what's gonna be worth like 150 a pop? 170?
Yeah, something like that.
Shit. Yeah, I don't know.
I mean, it depends on what the market's like tomorrow as well. Futures.
I guess I'm gonna use 646 because I do not trust 649. Like it could easily just pop below and I just get popped out immediately. So I'm gonna use like 646 or maybe like 645, whatever these pivots are in the hourly.
I'm straight looking at memes, Nvidia, ABNB this week, and some SPY.
No, AB. I tried short, dude. I don't even know. I longed AB and then I shorted it because it gapped up and it was puking. Oh, it was a disaster.
Hey,
I'm
I'm looking for like July just because you got reopening and everything.
Oh, you want July? Oh, you want swing? I don't do that. You know I don't.
Yeah. Oh yeah, definitely swing.
Oh yeah, swing. Oh yeah. This is the bottom. This is 130 was the bottom without a doubt. I mean, it was there before. Maybe 122. I don't even know, but it's got more upside than down, to be honest. Dude, look at that falling wedge. I remember that, dude. That was so bad. That was a bad day to be AB and B, dude. But yeah, honestly, because you got.
Anyone on here? I posted this link. Someone tweeted at me a news channel. You guys should look that out. That DTC or some shit. I don't know. It's just a lot of shady shit going on in the background right now with all these shorted stocks.
Yeah, whatever.
I read that was wild.
Yeah. Yeah, I don't know. It's some wild shit going on right now.
I don't know what A and B is gonna do though. Like it moved $1.50 after hours for some reason. Like that was cool when it had puts. You know.
I'm trying to
Why not?
look for it to get above the 20 SMA on the daily.
20? I don't even have the 20 mark, dude.
20 is like 145.
Hey, that's my trigger on the daily. Huh. And the week. Yeah. Fuck it, dude. Just long A or B and B over 145.
I really want a 150 call, but I don't want to spend too much.
How much is
150 for July.
I'm checking. I got the chain up right now. 150
Damn,
for July.
570.
Oh. Wait. For July 9th or the monthly?
A monthly.
Oh yeah. Yeah, that's a little price boy. Yeah. And the problem is it's gonna gap up $1 too, so it's gonna be over 6.
Yeah. 37 del.
Oh yeah. Yeah, that's over $600. I mean, if you get above 145, sure. I don't know what's gonna do tomorrow. Now if it goes compound 3 down to 135, I'm gonna cry. But oh no, you know what's really good? Dude, grow generation. I was telling Brady about it. Dude, look at this hammer. This is a great example for anyone still listening. Like this hammer right here. Now the reason it's so important is because it's already touched the bottom of the brow information I had like months ago. Like I had this line going. No. Yeah. Yeah, this
There. I don't know. It looks like some of this weed stuff looking at the bottom too. I don't know though.
I know. Nah, see the reason I like it so much is inside week up, right? This hammer changed continuity on Friday. It was red the entire month until Friday.
Yeah.
So that means buyers had to step up and show up, and now they flip continuity. And that's a fat hammer, dude. That's a fatty hammer. Like over 44.50, there's no reason you can't swing it. Like I told Brady, I was like, dude, buy a leap if it's above 45. Plus, it already hit 200 SMA, like right here at earnings. And it couldn't have been that bad if it's going up still. Oh.
Yeah, daily looking nice.
Dude, across the 50? Like, dude, 9 over the 50? Oh, yeah, dude, 9's been over the 50. Oh, yeah. Yeah, dude, long this over like 44.50. You can definitely day trade it. Because you have a gap fill to 47.
Or my new ones, I was looking at 9 over 20 on the daily, which it just did.
Bro, 9 EMA?
Yeah.
Sure. Dude, I don't do indicators anymore. The only one that's like maybe good is like 200, 100 for like long term. If I should just be longing or shorting it.
Yeah.
I mean, I don't really need confirmation bias because I already have it. Like fuck dude, don't listen to anybody. Literally, do not listen to a single person, because 90% of retail fails, and I guarantee part of that 90% retail is in here. Like, do not listen to anybody. Don't even listen to me, dude.
That's me.
Don't even listen to me, dude. I am down, dude. I am down so much. I've traded less here, and I am down over 10 grand, dude. Like, I'm still learning this so hard. So like, do not listen to anything. Like I've done this.
Setups.
I know.
Trade your setups.
It does. Yeah, literally.
It's a
trade your setups.
You gotta have a plan. That's kind of a lot of it is. Like if you have a game plan and follow through, you should be good.
Yeah. That's why I have the watch list every day. I give everybody a free game plan every fucking day. Like if you followed my game plan, you probably would have made money. I have not back tested it yet, and I'm way too lazy to do it. But it probably would have worked. Probably would have worked. To be honest. So. And again, if Grow Generation doesn't trigger, just don't trade it. Fuck. That's all you gotta do. Just don't trade it. Wait till the trigger happens and you're chilling. Let me see that UW. They buy. Why can't I? They bought a 48 call? Dude, a 48 call is $40? I might do that. Oh my lord, that's cheap. I spent $50 on a lot worse things, dude. I'm gonna tell you that right now. Tell you that right now, dude. $50 for a 48. I mean, end of the week, that is not unreasonable at all. I'll be honest with you. 48 in the money. If you can take out these pivots at 46 or 47, this 47. If you can take out this 47 range, 48 is free because you're stopping out people here. Ooh.
Apple leaps.
I don't sure. I mean, it probably works.
This 150 call for January 22nd, like 315.
Dude, fuck that, dude. Fuck it. Dude, short Apple. Like, look at it. Look at it.
No, but the IV's so low. I don't know if you've seen that one post. Like, if you want to get leaps, now's the time. I'm not saying go all in, but like, start grading your shits.
150 leap is 1080.
Is what?
For January 23 or 22?
22nd.
Oh, yeah, probably.
It was 2 racks at the top. I mean, that's a 7-bagger if you can get it right now.
Honestly. All right. Back to some strat related stuff.
I'm about to get off and do some setups.
Bro, I am the setups. What do you mean? Oh, dude, look at crowd.
No, I want to do some meme setups just in case.
I know. Me too. I'm not ready for any memes, but trade the price action. Dude, that's all you can do.
Whoever's on here, I'll be on around like 9. I'll post a Zoom link. I'll catch up with you.
All right, bro.
Yeah.
All right. Anyone have any strat questions yet? I plan on going over. Is everyone still good? If everyone's fucking tired, we got all year to do this. This is not
True,
to be
I
a
ain't
one
going
meeting
anywhere.
meets all.
Well, unless all my money goes away, and then
And you're paper trading. Dude.
True.
What? I'm just wondering, how are you using hotkeys to market order options?
On Thinkorswim?
Yeah, it's on Thinkorswim. How are you doing it?
Yeah, sure. So I have a options like what you can do. So like for example, if I was just to buy like this, I just buy single, and then just wait. I'm sorry. Oopsie. How did I do it? Is this the ask? That is the ask. Yeah, I think because market's not open, but there's just a buy and sell. Just confirm it. Or if you really want to be quick, like for example, I'm eyeing like GPN, right? So I can load up GPN. Do you have Thinkorswim, Vard?
Yeah.
Okay, cool. Yeah, so you can throw options into a watch list. So like I have an options like plays. Yeah. Like I
Did
have.
you find these scans? Oh, sorry, completely random.
No, you're good.
I'm just looking at all your scans and I'm like, ooh.
No, they're all made. A few of them were given to me, but
Oh,
most
okay.
most of them were made. I mean, again, a 2 down not in force or a 2 up not in force, you can scan for. If you think about the definition of what it is a 2 up, so the high is higher than the bar from 1 bar ago, right? But the close is lower than the high from 1 bar ago. That's all it is.
And you just did it with the coding in Thinkorswim.
Yeah, it's not even coding.
Oh, okay. Yeah, yeah.
It's not. It's literally like, is the high greater
Technically
than the
still.
high? Bro, I'll show.
Don't cut yourself short.
Bro, I will show you the code that you're talking about.
It's like 2 lines or something.
This is it. Close greater than.
There you go.
Yeah, those are your
Okay.
coding lines. And again, you could use the condition wizard, or you can type it, but you can just condition wizard it. You don't even need to actually code it. But if you want to be fast, then yeah, just type it out. So again, back to the option stuff. You can load in any like option contract. So like if I was eyeing GPN for like a 190 call or whatever, I could add it to a watch list. Like I could add it to option plays. Yeah, add to watch list. Add to option plays, and then I can have it sit right here. And then you can just right click and buy it.
Okay, that's genius. Thank you.
Yeah. I mean, if you even if not, you can just load up GPN or whatever it is, and then just go to it.
Yeah, I was just wondering like how you're doing with the hotkeys because I was looking that up and I wouldn't work, but this makes a lot more sense. Yeah.
There's also active trader I need to get off GPN. So like if I, for example, I'll tag this to yellow. So if I had this on yellow, right, and I had this GPN, I could load up active trader, and you can see there's a buy and sell market. You can just hit that, or just hit the key like Alt B, Alt S, and you can just hotkey in and out. Like once.
Yeah, it was just my question was like getting the option to quickly show up and putting it to the watch list makes a lot of sense.
Yeah, just
you answered my question. Thank you.
Yeah, just Alt B or just hit buy and hit sell. Like it'll do it automatically. Just fill it for you. So pretty solid in and out. Anyone else have any other questions before I go into more strat shit? Cool. I do plan on making more TOS videos so I can explain like that and stuff in the video. People can just follow it. But yeah. If you do want to trade, I can go over how to trade, not gaps, but things that are failing. Things you can use to enter. I need one of them. I would have slid that. Okay. So if I go back to like this 2-up day 9-4 stuff, I go to like Willow. Which you can do for trading threes specifically, because if you recall, obviously a 3 is when you take out the high and the low of the bar. So actually I can actually probably show you guys. What day is this? 27th? Yeah. Alright, check this out. So I can go to on demand. Go to May. 27th of May. Because in TOS you can go through old, like, trade it. Nah, it's still that. Let me go to like 9:30. So for example, obviously it starts Twillo like right now at 9:30 on the 27th. It's like this one trading. Yeah, it's doing this on the 5er. I'll load up 15 for you guys. It's doing this on the 15, right? So I'm gonna fast forward like an hour just to show. So like obviously if you're trading, there's not really a clear setup on the daily, to be honest, and that's okay. It doesn't always have to be. But go ahead, an hour. Okay. Oof. It already happened. Anyways. So what you can do is when you see that you have price rejection in one direction, you can take it this wouldn't be your entry short, and this can be your entry long. Now, it can be kind of risky to use the high or the low of that bar to enter the opposite directions. As you can see, you clearly had lower price rejection, which it did, like right here at 325. It broke that, came back the other way once it hit ADR. So once you realize that you have the price rejection in the other direction, you can start trading it the other way. So you can either use the low if you were to take it long, or you can, I would probably use the open slash, I would basically use the body of the candle as a more likely trade to work, basically, as or like a more safer option. Because yeah, you could try to snipe into 325, but it could just peak up and then puke again. Because again, you got to remember at one point this was a fatty red, dude. I'll go back. What time is this? 9:40. Like if we go to 9:40 right now. This is no problem. This shit takes 20 years to load. 20 years to load. Why are you still playing? All right, let's go back. 27th, 9:40. All right. So once it loads up. Now, obviously, when you see, again, it's 9:40 in the morning. When you're seeing this, you know, you really got to ask, what's going through your mind right now? Besides, Twillo is puking itself, right? So that's the main reason I recommend using like either the close, or basically the body of the candle, I should say, because open and close can interchange. Or what Sarah, the Strat Sniper, likes to do is she likes to use basically the 50% of the bar, or the HL over 2, technically. So your 50%, there's scripts you can use for it, but like your 50% would be like, what is this? 335 to 325. So we'll round it to $5. So like let's say the 330 mark is your 50% level. I'm just gonna round it to there. So you could have used that as your entry to take it the other way once you because you're gonna trade. You want to trade outside bars, but you don't want to trade it once it becomes a 3, because you're pretty late to the party after it's already a 3. You want to trade it as it's coming through the range. So again, if we go back, if we go ahead like 15 minutes. This stuff is clunky. I am very apologetic. So like yeah, you can see close puking, right? But then it turns around. So once you get something like this, when price is coming back through its range and it reaches like the 50% mark, that can be your cue to take it the other direction. Because sellers try to take it this way, and again, remember at 9:40, it was looking grim. Like it was looking like a red day for Twillo, right? But buyers stepped up, yada yada yada, and they took it the other way. And again, good reason to mark your charts, because if you had this marked, you could have at least had an idea. Look how close it comes. It comes in like 20 cents. So you at least could have had an idea of where price could have turned around, right? That's why it's very important. Always just mark some daily, even the daily, just throw some daily levels. Just throw them on there. Because you realize once you come this is a make or break level. You break this, you know you're going down. If it turns around, well, guess what? It's probably going to do this, right? So once you break this 50% level or area, you can take the trade the other direction in hopes to becoming a 3. And again, this would have showed up. This like stock would have showed up on the 2 down, not enforced, if you were scanning for this stuff, because obviously you took it 2 down, but the close is above the low, so the 2 down is not enforced. So it could have showed up, or you could have scanned for something like high low. The close is greater than the high low divided by 2, because then you know that price went down and then came back the other way, and you could start to looking for entries to take it long in hopes to become an outside bar, which it did today, obviously, once I end it. So just to recap, if you're trying to take 2 go 3s, the safest is waiting till it's 50% through the previous range of the bar. If you really want to try, if you want to be aggressive, take it the moment it doesn't break the low or the high and it's no longer enforced, or you can use the body of the candle if you want like a middle ground. But if you really want the safest, definitely go the 50% level or like the HL divided by 2. You want the safest like entry. Why is it still doing this? All right, load something else up. All right, so like Facebook, I'm definitely eyeing Facebook, right? Got this broad information way up here, all-time highs, right? Like this thing's got more downside than up. And we had an inside day today, or Friday. So I'm looking to take this under 328.33 in hopes to take out 326.76. And I guess bonus would be 325.95 or 325.82 or 324. Again, they got like 3 pivots below me. Solid setup. Nothing wrong with that. And again, if it doesn't trigger, we ain't going to trade it. That's all I'm waiting for is 320.33. Boom, boom, boom. And again, if it reaches 326 and it pokes below and starts coming back through 326, or your first essentially magnitude is now your exit point or your trailing stop, whatever you want to call it. That should be your reason to say, okay, I hit my first target. I'm not going to get the second target. I can get out. Or you just cut it immediately there. Because very often than not, the price will literally hit it to the wick / the penny and then just go the other way immediately. And you might not even have time to say, oh, it might go to 325.80, etc., etc. So that is something to keep in mind, which is why Sarah will always iterate, just take your money at profit, your targets. You don't even have to worry about it. I can go over some inside day stuff. Is anyone confused on trading the 2-go-3s? I'm going to assume no.
I guess that's a no.
All right. All right. Do I like using the Strat over the 9 EMA? What do I like about using Strat? The reason I like Strat is because it's price action. And yeah, like Dark is saying, it's price action and it will occur before the indicator does. Like I can show you on Facebook. Actually, yeah, today. No. Thursday. Yeah. I show you Thursday in the 3. Grade A TLVX. By definition, this TLVX was amazing. Where is it? I need to find it now. Yeah. Here we go. I can show you some volume. So, wait. 27th. Next day. My bad. Okay. Perfect. Grade A crossing. You get a nice solid cross. I'll maximize it for you. I'm terribly sorry. Okay. So you get a solid cross on the EMA. Then you get a really nice pullback and then push up. Boom. And if I show you some volume, I'm 99% sure that a volume spike. Yeah. So you can see as you're crossing, you get a little bit of you got low volume over here. 1006, 1003 area. And then right out here, 1015, volume push right over VUF. Then you get another big volume push. Absolutely astronomical volume push. And then just climbs to the high. And there's nothing wrong with that. You could have easily done that. Or, guess what? Now, the real issue with indicators is a lot of this stuff is calculated at the close. So that means the candle has to close in order for the calculation to occur. Now, you could use last, and obviously the EMA or whatever will constantly update itself. But again, you're not going to have a clear value of what that indicator is until the bar closes. So if you were to use quote-unquote Strat, you could have taken this inside 3 and up, and you'd have been in here at 327.30, whatever. But if you're using TLVX, you're waiting for this cross to happen. So you're in. Let's say you play it perfectly, you're in at this pullback, because you're going to miss this. You're in at this pullback here at 328. And so because the Strat is all based on price action alone, you will always get in faster before indicators. Because indicators are, let's say, quote unquote, they're lagging indicators. And that's because price will either need to close or do something first before it could show up on the indicator. If you're trading price action, you're trading it as it happens. Now, I do use the TLVX to confirm or like negate a bias. So like if I'm in here, I'm taking this long, and I realize I get a TLVX after, I'm like, okay, great. You know, I have not only my setup working, I also have Dark setup working as well. So that's double confirmation to know that this trade is probably looking solid. Like it's probably gonna work, right? But again, the strat will always, because you're trading price action, you'll always get in earlier. You have to, unless you're not trading it correctly. You will always get in before the indicator tells you, because the indicator is always behind. So that's the only thing about them. But they are still good. There's absolutely nothing wrong with it. Because I do use the EMAs and stuff to negate or confirm what I'm already doing. Like, so for example, like if I have like RSI up, I could say, okay, is the RSI climbing after I take this trade? You know, things like that. Or whatever you want to use. I don't use any of it, but if you wanted to, you could use these indicators to confirm or negate your strat trade with something that you're probably more familiar with already, as everyone probably knows what RSI is, or like a MACD, or even VWAP. You get the VWAP claim. I still use VWAP when I'm trading strat, because it is a clear level where price could either reject or climb above intraday. And I also have this ADR script, which essentially is the average daily range of a stock. So that can act as really good resistance or support throughout the day, and it obviously changes every day. So both of those are probably the two main indicators I follow. Because again, like if you're trading strat on like this 5, you don't know what, like it crosses up VWAP, crosses down. So like if you're trading strat, you might not know what's going on or why this level is so important, and that's what VWAP can tell you, or again ADR can tell you. Because if you blow through ADR, like on Moderna, it's off to the races, as Rob says. Like you're going up. Like you break this Moderna on Friday, you broke ADR at 182. You break that and you hold above it, you're flying. Like you only got upside if you break ADR and you don't go below it. You know what I'm saying? So those are the only two I really use though. I don't use this 50 SMA or whatever. I literally use VWAP and ADR, and that's only to gauge where price could possibly turn around. Like Airbnb that I took on Friday. Fix that up. Yeah, so you can see in the beginning of the day there was already VWAP rejection. So I had a really short bias towards it already just from the 10, because I took the trade here. I took this call, actually, right above this, right in this 2 up, like semi PMG setup. Stop these people out, claim VWAP, boom. So I did take that trade on Friday, but I still did have a short bias on it because you had VWAP rejection once and twice. And on strat, you wouldn't have seen that. On strat, you would have maybe even if you had the 15er,
Turn your thing down.
you know, you still get the VWAP rejections. Like you're more likely looking to short it
No.
than anything else. But that's why it's important there, is because once you cross it, that could also be your indication to hit it long, or vice versa. And you don't know. You're never going to know. But those are the only two things I use on my chart in terms of indicators. Other questions? I would say for anyone starting like brand new, fucking don't know nothing, trade ones. Just start with ones and go from there. That's all you got to start with. Ones are your bread and butter, and then eventually you can work towards like 2-2 reversals, and then eventually start trading 2-go 3s. But I would not go out of order, to be honest. There's no reason not to. You might as well start with the most basic stuff first. Also, check out that PMG right there. Stop them out, 1, 2, 3, boom. It's everywhere. And this is on a 15. Even though it was even though the 3 was this big red boy. All this price action stuff is everywhere in the strat. That's all it is. It's all price can do is trade a 1, 2, or 3. You could have took Airbnb. You got a shooter. This is a 130. It's a custom time frame. You could have taken this 2, 1, 2 down. Would have made money, and that's on a 2-hour block. Or look at this PMG kind of setup. Got all these highs, take them all out, bam. Get a Momo hammer. And obviously it's still a 1, but you're probably not going to break it lower just because that whole bottom tail. Take it long right after. And again, this is on a 2-hour time frame. So you can check charts. You can check charts like 4 times a day and be done. Or you could be sitting there day trading, you know, watching every tick on like a 3. It works everywhere. Or again, even on the weekly. What do you got? Boom. Take this up on the weekly. Oh, and best believe I had Airbnb on my watch list on the 26th. You can go look at it. I had it right here, 135.81. I already knew about it. I knew about it the moment it happened. That's all you're looking for is just price action. I like Etsy. We can see what's oh. Now look at this. Hammer doesn't go in force. Shooter under 164. Hit it. You break this, hit it. That's all you gotta do. Take a put. You're fine. You already get top of the broad information. You can target the bottom of it at like 150, 157. Like you got all these pivots below. You do have pivots above, but you got all these pivots below. And I'm literally just going off of this daily candle right here. That looks horrible. But yeah. Now, I do want to cover the broad information a little bit in terms of like how to draw it. So all it is you're connecting a high to a higher high or a low to a lower low. That's all you're doing. It will take a lot of practice. Now, obviously, you could draw one like this, connecting this high and this high. Now, obviously, you don't want something so steep that it looks like that. That's not, yes, price does move in a broad information, but it's not going to be that steep, right? So, like, for example, on the daily, if I zoom in, I'll maximize this, I'm sorry. I connect this high to this high, right here. Or you can connect it to this, I guess. And then connect this low to this low. And yes, price doesn't always have to be at a really steep angle like this. It can literally just be like super flat, even like 1 degree lower. This is barely lower, but it's still technically made a lower low. That's what matters. And price is essentially gonna exit from one broad information into another. It's just a range expansion. So once price, like, say, broke out of this range right here, of like this high and say like this low, once you break out of this, you have a range expansion. And that's all it is. That's all price is. Like a head and shoulders. I need a good head and shoulders example. I don't have one. But if you just think like a head and shoulders 1, 2, 3, and then it drops right after, that's just a range expansion. If you think about it. Go 1, 2, 3, drop. So that's why a lot of TA and stuff like that is a load of baloney, almost, because you don't need it. You don't need to watch an ascending triangle or anything like that. It's just a range expansion. Now, obviously, with the broad, you don't always have to have both. You don't always have to have the bottom or the top of the broad information. For example, like SPY, something that's just been climbing forever and it's going to climb until we're dead. Obviously, you're only gonna have a top formation for SPY to follow. You're not really gonna have one to the downside because it's very unlikely to just expand like that to like 360 or something like that. So you can get away with only having one, or even have like a channel like this. Which again, not always preach, but I still do like to have channels for stuff like that. Or again, just have one clear side of the broad information to trade off of. A great example is Chewy. Daily. You can see I had this level. This was on the month. It was on a monthly, yes. I connected this low to this low, and look where price went 2 months later. You could have known where price was going to go in 2 months. Not necessarily know where it's going to go. You could have known where it could end up. Obviously, you're not always going to hit the bottom of the bar information every single time, but it's going to be there at every time frame, no matter what. And you have an idea. My personal favorite, looking at Tesla on the weekly. If you're to draw broad information on this 1-3 right here, where it turns around in March, you're drawing a trend line or broad information, the bottom tier, from January, and it bottoms out in March. It's crazy. It works everywhere. Let's see. So, when you're drawing these things, again, it's just really good to look at. If you can have both ends of it, absolutely have both. But even one is okay to trade off of. It's like grow generation, I connected into one of them. Now when you connect them, it's gonna look wonky on a different time frame. But it's gonna be off by a few pennies. And you don't want to really include wide wicks like that, because you can just include candles next to it like these two. You have the lower wick and the body right next to each other. And then it connects into this low, and then also this low. Here. Connect. I think this is drawn here to here. But the point is, that can be your broad information on that time frame, on the daily. And you can see it kind of comes down to it, and then starts moving back through. Now, obviously, you're not going to always hit every broad information. You're not going to hit the very top of it, and then hit the bottom, and then hit the top, and hit the bottom. Like, that's not what's going to happen. But at the very worst, it'll give you indication of where price could turn around. Like Teladoc that I was eyeing beginning of the month, it did break through the broad information I had. Now, if you look at the dates on them, they're from the 8th in November. They are very old. They're very old broad information. It's a very old trend line. And you can see price didn't hold above it. It still expanded out. But that's okay, because that's all price does. It expands the range that it trades in. So, again, I got the highs connected. And then, again, remember, this is from way back when. You could have known where Teladoc could have maybe went. Months ahead. Absolute months ahead. Now, the only thing I have to say when you're drawing these broad informations that's very, very important, so please listen. When you're drawing these, you don't want to use, you want to go from front to back, meaning you go from the front to the back, front to back, not back to front. And you also want to not use the most recent candle to confirm the bias. So what I mean by that is, let's say I was to use this and like draw it to here. I could say, oh, Teladoc's bottom of the broad information, blah, blah, blah. When you give yourself a trend line that immediately confirms your broad information bias, it can force you to take essentially the wrong side of the trade. So yes, I have these from, so yes, price expanded from May, but this trend line is connecting the lows, again, from August and July, or August and November. So I'm using old candles, and not using the most recent one. Because again, that can give you, it can sway your bias, is one thing I noticed when people were brand new to drawing it or practicing drawing it, is that they'll say, oh, it's at the top of the bar formation, but they're using the most recent candle, and so it can it might confirm their bias and make them convinced to take it short when it could have been trading in a larger broad information that they didn't even know about, where it was actually like in the middle or the top or the bottom. So just keep that in mind when you're drawing them.
So, how far back is too far back?
There isn't.
There isn't. Okay, good.
But just do not go too close. The main thing.
Okay.
And obviously, if you have gappers, then that can be your new broad information. So like Netflix, prime example. You have a little sloppy, but okay. So price was obviously trading on this top of this broad information. Like I didn't have a bottom one yet, or no, I did have a bottom one connected like this all the way back to here. But obviously, once price exits out of this formation, you have your range expansion. So now you have a new formation to go off of. So like, I still have this high at 511. Actually, we can redraw it on the spot. So obviously now that price has exited out of this range, it's going to enter a new series of brown informations. So I could connect, say, this and this. There's a high right here, hidden by VWAP. Okay. So obviously you have that high, and then you could connect this low, like this, and that's your broad information on Netflix. And so you're expecting it to trade in this range. Again, it could expand. You never know. But you don't want to be using, like, you don't want to be going like here to here and then say, oh, it's at the top, and then short it. Now you could, obviously this is a shooter, but when you're using these very, very recent candles, you can almost confirm yourself into the wrong bias. Because again, if you were to look at this larger brown information, you're still in the middle of it. So there's still upside room. And especially if this wasn't a shooter, you might convince yourself to take the wrong side of the trade. So it just is one thing to keep in mind. And it is also okay to have price, like, yes, this is a lower low still, but price could, instead of expanding, it could not close, like this one's closing wider, it could close like this, like a small little trend line like that. There's nothing wrong with that. It doesn't always have to be expanding outwards, but also be ready for it too. That's how you get, this like old school descending triangles and stuff like that. Is from that. Is you're just expanding the range that it was trading in. Like Airbnb, favorite. It's honestly a textbook descending triangle, which annoys me. But you connect. Obviously, it's not making higher highs on the daily. I maximize it. It's not making higher highs, clearly. So you can't, there's no brown information to the upside, but you can still connect the lows, like here to here. And it connects back to here as well. And then obviously just pukes out of it, and that's just your range expansion. But again, as long as you have either the bottom or the upper leg of it, you will probably be okay. But you don't always have to have both. And the price doesn't always have to be expanding to a higher high. Like Airbnb's highest was in February, right? So it's just trading on this. It's making a higher low. So that's not a broad information in that aspect because it's not making higher highs. But it certainly is making lower lows, right? So that's why that bottom essentially leg of the broad information is still valid. And then hopefully, if you were to draw, say, like this one to connect this and this, say like here to here, here's your new formation. And we'll have to see what happens. And again, this is now your new brown information to trade off of. And that's all prices does. It's just gonna expand and then start a new brown information somewhere else. No head and shoulders, no inverse head and shoulders. None of that. That's all price is doing. Is just stopping people out and then just going the other way. I think the time frame continuity most people are set on. You obviously want to be longing something in the direction that it's going on the larger time frame. Now we are actually in a very, very odd spot because tomorrow begins June, which means you have a new month and a new week and a new day. So when you think about that, that means the month, week, and day are all going to start at the exact same spot, right? So it's all going to open up at, like, let's say it opened up at 173. So if I go to May 1st, open up at obviously 173.19, May 1st, 173.19. All the major time frames are going to open up at the exact same spot. So your time frame continuity is going to be not scuffed, but it won't be as clear because you can't tell if buyers and sellers are where they're at what time frame because all the time frames are the same right now. Like how in the first day or the first hour, the daily is going to look the exact same as the hourly candle. So what that is called uncoupling. So Obviously, come Tuesday, everything's going to open up at the exact same spot for every stock. It has to. So the month, week, and day are all going to be at whatever level. Now, come Tuesday, the day is now going to open up at a new level. And then come next week, the weekly is going to have a new level that it opens up at. And then next week, Tuesday, the weekly and the daily are going to have new levels. And then the hourly is also going to have. So everything will eventually uncouple from itself, is what they call it in the strat. And you will now have different time frames to base your time frame continuity off of. But right now, at the beginning, come Tuesday market open, all the time frame continuity is going to be the same. Because it all is opening up at the same level. So you need time to either confirm or negate what's happening. And for example, if you're going to have 5 days of green, like an Airbnb right here, like 5 days of green, you better be green the first 2 days. Otherwise, you're not going to have 5 days of green, right? So that's the importance of the uncoupling, is that's going to confirm or negate what's happening. Because if you're red on Monday and then green on Tuesday, what's happening, right? That's what you got. That's the importance of the uncoupling. Is because you could still have a red week, but a green Tuesday, or vice versa. Or let's say you're red Monday, you better be red Tuesday if you're going to be shorting it. You know what I'm saying? You want the agreements of the time frames, but you're not going to have that until next week Tuesday, where you have all 4 of them separate. You still can trade it, obviously, but that's just one thing to keep in mind, which is the phenomenon that happens at the beginning of every month. And then obviously every 3 months you get the new quarter, and then everything really, all the time frame really sets up and restarts itself every quarter. And then best believe, beginning of the year, everything really backs itself up. And everything starts at the exact same spot. So, we're actually about to start the phenomenon known as uncoupling. Very exciting. So it is something to keep in mind if you're trying to take time frame continuity trades like on this watch list. Because if you think about it, if everything is opening up come Monday or Tuesday at the same level, if you're green on the day on Tuesday, you're also green on the week, because the week and the day are the same. And that means you're also green on the month, because the day, the week, and the month are all the same. They all open up at the same level. So if you opened at 180 and you're trading at 185, you're green on all time frames by definition. So when it comes to the scanners, be very wary of that. You'll notice a lot more stuff popping up because of that. Because if it's green on Tuesday, it's going to have time frame continuity on all time frames. Because that's the only information it has to go off of. So come next week, we'll have information to confirm or negate what's happening. So it could be, something could be green first week of June. It could be red the next 3. We're not going to know until we find out. So when it comes back to the scanner stuff, I do want to talk about it because I feel like a lot of people are unfamiliar with it. All of this stuff, all of word scans is based off of inside days and time frame continuity. So it's still part of the strat and is absolutely integrated in. So for example, inside days, they're exactly what they sound like that we were talking about in the very beginning. You take out neither the high or the low. Those yellow candles that you see are inside candles. All of these had an inside day on Friday or Thursday. It would have been Thursday. And again, inside last week, you can probably guess what it is. Was it inside last week? Yep. Now, again, he does have, very conveniently, you can see a above previous high. So that means the close is above the high. So you could actually, if you wanted to practice trading inside bars, you could just look at this watch list. So for example, SQ, it started at whatever. It had an inside day Thursday. And as long as this is green, you will know that you have a 2 up that is in force, but you're red on these time frames. So you could just watch this scanner and see what's happening with these inside days. Or same with inside weeks. Like if I go to beyond, and inside week last week, right? So it has a green box, meaning it's above the week's high. So if I go to beyond right now, you can see it's obviously clearly above last week's high. It's been above, but you get the point. you could have used the scanner to know that, okay, this is a trade I can execute on if you wanted to watch a bunch of them at once. Obviously, I don't look for only inside breaks, but this scanner is going to be really good for that. If you wanted to start trading strat stuff, trade break of ones first. And this scanner is going to be your best friend because he's going to give you inside days already, and then it's going to tell you, is it above or below that already as it's happening. Like coin had an inside day Thursday, right? And it's red. That means it's trading below the low of yesterday. If I go to coin right now on Friday and inside day Thursday, and it's trading below the low of yesterday. And that's how you can utilize the scanner for basic like strat entries. And even if it's trading below like 240, you didn't necessarily miss the party because you can use smaller time frames to get entries. So yeah, your entry on the daily would have been 240 and you could have missed it. But you could have taken, say, this inside bar right here, take the 212, set your stop up to like 240, and it would have worked. You didn't hit your stop loss at all if you set your stop to the top of this bar, and you would have made money. And you would puked at the end of the day, right? So just because it's past its trigger on the daily doesn't mean you missed it. And that's the example of using smaller time frame stuff to get the entries again. Is you could also use that, let's say you're in at 240 and you're using the daily trigger, you could use this 15 as a time to add to your position. Adding to positions is what makes huge winners. Because people have no problem averaging down, but for some reason people don't add into their winners. If you're already winning, why would you not be buying more of it? Why would you not be adding on to it to get more shares, more contracts, etc., to increase the size of your winning position already? Apparently it has something to do with psychology of, like, you go to the market and you get something on the discount. Like, people have no problem with that, which is why people average down in the markets. But if they're already winning, they see no reason to add more to it, when that's just not the case. Like, this is a prime example. If you're in at 240, and then you're adding more at 238. So let's say you got like 5 contracts here, you add another 5 here. Now you got 10 contracts that are winning. You have 10 winning contracts compared to having just 5. And that's how you can amplify your winners and make a lot more money by adding to your winners. And anything that loses, you cut immediately. You don't add to, you don't average down, you just cut it and say, it's okay, it's a loss, the loss is okay. But the winners you add to. I'm sure most people in here haven't actually added to winners. It's a very, very rare occurrence that most people, when they're starting off, do not do. It is extremely important to add to your winners. There's no reason not to. If you're already winning, you might as well win more. So, back to the scanner stuff. Hopefully everyone understands that. Inside day yesterday, got the box to tell you whether you're breaking the high or the low, and you can use the smaller time frames like the 15, whatever. Trade the break of a 1, another same exact thing you're doing on the larger time frame to get in on the smaller time frame. Same thing with the weeks. Not going to reiterate it. Same exact thing. So, this TFC, I forgot what his A+ scan is. I really did. I think it has something to do with the CCI. I'm not sure. But, either way, anything with here has time frame continuity. So you already know that buyers are present. They're already present on that time frame. Because if you're not green on the month, week, and day, buyers aren't there. Then obviously you have TLVX. That's Dark's bread and butter with the 9 EMA and the VWAP. Nothing wrong with that. Opening range breakout, same thing, but the opening range breakout essentially is the width of the 15-minute bar at open. So if you were to trade coin, your opening range breakout would be this, 244 to 238.5. So you could trade something breaking the opening range, which is why I talk about waiting 15 minutes, because once you break this in either direction, you know you're going somewhere. You have to be. And that's what the opening range breakout means. The prime for launch should be 9/50 on the hourly or daily. I want to say it's one or the other. No, it's got to be the daily because he has the hourly right here. these are really good for longs, and you should definitely eye anything on here for strat entries long or short on the short scans. This is obviously all long, so you're going to be taking it long. And then open above yesterday high is anything that's essentially a gap that can blow shorts out of the water. So like a great example is like Facebook. Where is it? Ah, yeah, right here. This was what I was talking to Word about trying to come up with. So you can see right here, you get this wide red bar on the 21st, but you open at like 318. So anyone short under here is underwater, right? And now you're pushing price higher. Now once you blow past it, anyone that went short the 21st has to be losing. They can't be winning. There's no way, right? If price is above this, how can they be winning? So you're again converting all of them into buyers and now pushing price up higher. So we are trying to work on a scan to catch things like this, but that's essentially what it is. It's a kicking bull or kicking bear is gapping up or closing up very quickly and getting everyone from the day before underwater and forcing them to close their position. Because anyone that got short the 21st now has to turn into a buyer on the 24th, and now they're pushing price up higher. And then X for SPY is exactly what it sounds like. So does anyone have any questions on these scanners? Now that hopefully you are somewhat familiar with the strat, you should be able, this inside week and last week should be very clear to you what it all means. You have the time frame continuity on the smaller time frames, an inside day yesterday, inside week last week, and are you trading above or below it? It's bread and butter strat. It's now just in a watch list column. You can watch a bunch of stocks at once instead of like forming a watch list, for example. Same thing with the week. You know exactly what finished inside and what's above. Obviously, anything above you want to be logging, and vice versa. Everyone good on that? Picking options. Yeah. What do I look for? DTE at strike. Okay, so DTE, you can just use weeklies. If I'm trading Friday, if I'm not doing 0 DTEs, I'm playing next week's. But more often than not, I'm literally just playing weeklies. Now, in terms of strike, it really comes down to the amount of money you want to lose. So, again, that comes down to your delta that you want to risk. So, like, if I don't want to lose, like, let's say you're setting $1.50 in the underlying for your stop loss or $2. If you don't want to lose $100, your delta shouldn't be over like 60, because that means you would lose $100. But if you want to barely lose, you could have like a 30 delta. So the strike really doesn't matter. It comes down to how much money you want to risk. Now, again, if you just want 50 delta or around 50 every time because you have $1 stop loss or whatever, then yeah, you can just go at the money if that's what you want to risk. But that's something you should figure out ahead of time. And you should just be picking your contracts based off their delta. And that's it. And then obviously you can just get weeklies. Or if you want to buy a little bit more time, or if like if the theta's scuffed, like SQ theta on like a Thursday and Wednesday is like over 80. So you can lose a lot just by trying to day trade it. You might want to say go get next week's just because the theta is so high halfway through the week. Like the theta on these, the theta is already 48. And by the time you hit like Wednesday and Thursday, it's going to be over 80. So if you're trying to day trade, $80 in just the theta can be a lot. Yeah, you might be selling halfway through the day, so it's only like 40 to 60 theta, but that's still a good chunk of money. That's $1 move in the underlying if your delta's 50. So that's just something to consider. Obviously, you need more money to play longer dated contracts, but if you're just day trading, like obviously the theta only these is 30. It's still lower. It's still a lot, but it really just comes down to how much money you want to risk. And honestly, the day of the week, I would say definitely matters. And also your account size, because you might not be able to buy next week dated contracts and trade those either. But hopefully that helps you out. And again, just go off the delta of the amount you want to risk. Like if you only want to, if you want a $2 stop loss and lose $60, you're getting this 33. Don't get this 50 because then you'd lose $100. Just go off that. Because the way I see it is the bid and ask is the amount of money just to enter the play. I could buy the contract at 470 and sell it at 4. I lost $70. So, but that doesn't mean I'm losing $470 either just for playing. Like, I'm losing $70. So, it's really important to understand the Greeks and how much you want to lose if the trade doesn't work in the underlying. Because that's what's going to determine the value of your contract. And also, anything you're trading chart-related should go very, very quickly. Like, it shouldn't wait. Like, if you're trading a break of a 1, it's going to be fast. You're going to want to either market order in or just be ready for it to happen very, very quickly. Because if it doesn't work, like, every trade you take should work in like 5 minutes, 10 minutes, worst case. Unless you're doing like unless you're using like the weekly time frame or something. If you're day trading, your trade should work in less than 15 minutes, worst case. Like, if it's lingering around right at your trigger, like right at your stop loss, you might as well just cut it and just re-enter if you have to. There's nothing wrong with what you're entering. I think for now that's pretty much it. This video is like 2 hours. I need to upload it still.